Hello and welcome to episode 9 of the Gold Goats and Guns podcast. My name is Tom Luongo. It is Friday, May 26th, 2017. So there's a lot going on in the world. We've got the G7 this weekend, and Trump just got finished ticking people off over at the NATO summit. So it's been a heck of a time. And then I know we went over the text of his speech with the Saudi Arabians on Sunday, but he also visited Israel and Palestine, Palestinian leaders as well, and the optics surrounding that absolutely support what I was talking about the other day. But we're going to not talk about that in too much depth today, and we're going to move forward with what's coming up this weekend at the G7. So let's get started. All right, so Trump's already fired off a pretty big truth bomb, honestly, about towards the Germans, and I said earlier in the week on a number of articles that Trump would be laying down the law with the Germans. I said this over at Seeking Alpha. I said it over at Halsey News. I really feel that there's a brewing showdown happening between Angela Merkel and Donald Trump, and Merkel is the point person for the existing, call it New World Order, call it global oligarchy, globalist oligarchy, call it deep state, call it whatever you want. I don't really care. But those people, and not saying that in any way that Trump is completely independent of that group. He's not. But he is far more independent and far more America-centric than they would like him to be. And so Merkel is their point person at this point, and she fired off over the last couple of weeks since the victory by her Christian Democratic Union in North Rhine-Westphalia, that she's been firing off stuff left and right, trying to put the fear of God into the Brits over Brexit, and and everything else. So Trump shot back this morning and said the Germans have been very bad on trade, very bad. They sell too many cars here in the United States, too many German cars here in the United States. They also build a lot of German cars here in the United States, by the way, and he knows that. And this is him playing to. This is him, grandstanding effectively. But he's also making it abundantly clear that the Germans have to start spending pulling their weight within NATO the way they're supposed to, because the United States has been footing the bill for it, and we're tired of it, and we don't need to spend that money. And Trump knows that if he gets the Germans to raise their defense spending to the NATO minimum, that's money that can come out of the Defense Department's budget here in the United States, and it can make it easier for him to sell domestically the idea of massive tax cuts. Remember, he put out his budget this week, which literally takes an axe to entitlement programs. I mean, in a way that I never thought I would see outside of, a hardcore libertarian like myself entering the White House. I mean, he was talking about $800 billion in cuts to Medicaid this year, $200 billion over 10 years in cuts to SNAP. Okay. And those types of cuts are aimed squarely at Democrat vote buying schemes. Don't kid yourself. That's what that's about. It's about stopping illegal immigration and then putting these people on the welfare system in various different ways, and then giving them IDs and giving them the opportunity to vote for the Democrats who gave them all of this in the first place. And I've said for a while now that you can't have open borders in the context of an out of control welfare and warfare state. It doesn't work. Okay, it doesn't, and I'm not going to listen to a thing out of most left libertarians who are not libertarians. Arguments about open borders. They're completely all wet on this, and they always have been, and they always will be. And it's bearing itself out and every day that they're wrong. That the real world consequences of a welfare state that creates the economic incentive for people to come over here and create an entire and free ride off the system in the same way that the Germans are free riding off of NATO. And the United States' contributions to NATO, it's insane. And you have to stop the economic incentives if you want to stop the policy. If you want to stop the process. The wall, for example, is completely It's not completely irrelevant, but it's completely obviated if you completely reform welfare and you completely reform Medicaid. Period. You just do. It will happen. So stronger border enforcement, obviously, stronger deportations, obviously, and stop handing out money so that money can stay in the middle class where it belongs. And Merkel is a communist, and she hates the middle class, and so do all these people, and that's why they're doing this. It's why these policies exist. Leftists hate the middle class. They want it destroyed. They want to be in charge of a faceless, powerless proletariat. Period. And they use emotional arguments to get what they want. And Trump and every time Trump opens his mouth when he deals with one of these people, this is exactly what he's saying. You have to decode, in effect, that's what he's saying, and that's how you have to decode these statements from him. So him going after the Germans over selling too many cars, great. Here in the U.S., fine. I don't care whether we sell more BMWs and Volkswagens here as opposed to Fords and Chevys. If Germany makes better cars, which they do, then they should be rewarded with that. But they should not also, at the same time, demand that we pay for their national defense, which lowers the price of their German cars. And they're pursuing they're having to pursue monetary policy that only feeds into that. Okay? So, Trump understands that the dollar can't go through another supercycle high. He's not going to be able to avoid it, mind you. The euro is going to crash because of political concerns, because of a sovereign debt crisis that's already unfolding. It's just unfolding in slow real time. So, which gets me to bullet point number 2. Okay, now all of this is, and Merkel knows that she's got a real problem and is trying to double down on squashing populism. And then we have Catalonia a week later come out and say, look, we're going to hold a referendum, and if you try and block us from doing so, we're just going to unilaterally declare independence from Spain. And if Catalonia declares independence from Spain, the EU's credit rating immediately has to drop because this is the most prosperous state in Spain. Spain's GDP drops by something like 25% immediately. If Catalonia declares independence, issues its own currency, starts its own banking system, removes itself from the euro and everything else, all of a sudden now Spain's debt to GDP ratio skyrockets. Their primary budget deficit skyrockets, and the EU is going to have to. What's the EU going to do? Going to bail them out? Or Merkel going to sit there and Schäuble, her finance minister, going to complain that Draghi's being ECB President Mario Draghi is being too accommodative in this kind of situation? Of course not. They're going to have to open up the freaking money spigots. You're going to see CDS rates blow out like you wouldn't believe it. You're going to see interest rate derivative swaps blow up left and right. If you think that the dollar liquidity is tight now and the euro dollar markets are a mess now, wait until Catalonia actually declares independence. And don't kid yourselves. They're doing this. They're ready to issue currency. They've already written the constitutions. They've already set up all of the parallel institutions. They already know what they're going to do. They've been doing this for 2 years. And so this referendum they're setting it for September, right around the same time that Merkel's going to be trying to get reelected, trying to seal the deal on getting reelected. It's all coming together, and September is looking like an absolute mess. And then, in a week and a half, we've got the British snap elections, and you don't think that Trump is going to be there at the G7 with his arm around Theresa May going, yeah, come on, Merkel, bring it. Teresa's my babe. Brexit's going to happen. It's just the way it is. Look, you don't think Trump is? Do you think Trump is today or tomorrow going to throw the Brits under the bus for the Germans, who he absolutely does not like economically and politically? As a people, he has no problem with it. It's the German government he has a problem with. It's Angela Merkel he has a problem with. It's the EU he has a problem with, and he's identified that they are a problem. This is a man who's in power because of a massive democratic populist wave that said enough is enough. And the one thing, Trump is many, many things, but the one thing he's not is a guy who goes back on his word. I'm sorry, he doesn't. You may not like the way he deals with things. You may not like the way he says things. You might not like the fact that words that come out of his mouth during negotiations don't mean anything. But when he signs a deal, he honors it. As long as the other party honors the deal as well. And every story I've heard about Donald Trump as a developer, where he stiffs contractors, is due to the fact that the contractors were trying to stiff him first, or did shoddy work that was not up to standard, and not up to the standard of the contract. I'm not saying he's a nice guy, because he's not. He's a jackass. But that's the kind of person you actually need in this situation at this moment in time. Okay? Because this is bigger than just the health of the United States. This is about the frickin' world. Okay? So the monetary system is failing. And if you don't think that the monetary system isn't failing, then you haven't been watching the price of Bitcoin. Because Bitcoin this week, they mostly solved the hard fork issue. And if you're not keeping up on what's happening within cryptocurrencies, and that's not really that important, just understand that Bitcoin was reaching the original structure of Bitcoin, which was a beta, which was a kind of an alpha version of Bitcoin that got loose. Okay, it was never meant to do this in what it's done, but since 2010, it was meant as a proof of concept when it was first released. I know, I was there. I discussed this with the guys who created it and were implementing it. I know this, and it's just kind of snowballed completely out of control. And so this week they had to do something to make the Bitcoin network competitive, because it was losing its competitiveness to other cryptocurrencies and other currencies. Its transaction costs were rising rapidly. Clearing services, clearing times were rising. All of this stuff was becoming a mess, and it was reaching a limit of the way the blockchain was designed, because it was never designed this kind of volume. So it was reaching the limit of what those design criteria could handle, and so there had to be a new blockchain effectively created. And I'm going to do the specifics. I'm not even sure I understand them all. I just know that, at the end of the day, what's happened with with Bitcoin this week is a good thing in order to ensure, in order to effectively kick this can down the road a couple more years before they run into a structural problem again because of the way it was designed. Okay. But understand that that doesn't mean that there's a problem with all cryptocurrency, that this problem exists for all cryptocurrencies. Remember, it's just code. You write good code that's flexible, you can create a better currency. And that's why I was always lukewarm on Bitcoin as an object, even after I realized very early on that it was brilliant. Because I'm like, it could crash and burn because it's not robust enough, a system. And right now it's trading at $2,600 a piece. And there's credible research out there that says it could easily be 13 or 14,000 a piece by the time frame we're talking about in September, when all of this other stuff is coming due. Okay, if you follow the work of Cliff High, that's what he's talking about. He's talking about like $13,000 a piece by September, and that matches up nicely with Catalonia, matches up nicely with the German elections, it matches up nicely with with other events that are happening around the world. So understand that other cryptocurrencies are gaining benefit from that, and like Ethereum and others, and they are an unmanipulated, honest market in effectively in currency, in money. And what they're telling you is that the monetary system, as it's that's as practiced by these incredibly powerful people, is failing. Now, these very powerful people still have control of the gold market. They still have control of the silver market. But that's also changing underneath their feet as well. And they have legislative things in place which may ensure that capital can't leave their system that quickly. it's inertia. It's a multi-trillion-dollar thing, and Bitcoin's got a market cap right now of like $45 billion. It's not nearly enough. It's not robust enough at these prices. Just like gold is not robust enough at these prices to clear these markets. And that's why something has to give. Either the system has to be reformed completely from the ground up and everything allowed to crash, which it needs to do to balance the current prices of Bitcoin and gold, or they have to rise substantially from where they are. That's it. That's all you got. Gresham's law is taking over. And, there was a $500 drop in the price of Bitcoin yesterday. It's come back. It's now $2,600. It went up another $600 today. There's real capital flight concerns, and there are real capital control concerns around the world, and it's creating massive demand. Now, is that demand a bubble in the short term? Yeah, most probably. Will we see a $1,000 crash in Bitcoin next week? Possibly, because anything that goes straight up in the air eventually comes straight down. But that doesn't mean that it's done. If it corrects back to 1,600, we're just talking about prices from last month. Now what? Right. The overall big trend is still good. I had an article at Seeking Alpha yesterday on the Canadian dollar, and I put up the quarterly chart and showed people just how huge, just how bad the fundamentals are for the Canadian dollar. We had a massive spike thanks to the price in oil drop down to $28 last January. The Canadian dollar spiked to $1.46 and then corrected. And if you look at the rest of the quarterly chart, there was never a reversal signal thrown on the quarterly chart. It's still rising. It's still building a parabolic up move, or down move in this case, a parabolic devaluation move. And there are people out there saying that we're going to be looking at $70 oil and a massive snapback rally in the Canadian dollar, and I'm like, you're high, and that scares me that you're that delusional. You're almost as delusional as Angela Merkel at this point. Speaking of oil, OPEC caved. They didn't do the OPEC meeting yesterday was a non-event. And oil immediately crashed, and they're trying to six save it this week and probably successfully will avoid a bad technical signal, a horrible technical signal being given in the oil markets today. And I'll show you that chart in just a minute. So why don't we get to the charts, because that's it, and I'll get you out of here. All right, so gold is up this morning, and it looked really vulnerable a couple of days ago. Actually, it looked really vulnerable last night before I went to bed. And then it popped this morning back up to 1266, but we're still looking at this 1272.40 level as the important level. There's a lot of resistance in this chart to 1265. There's like downtrend numbers. There's downtrend bullish. There's all those. If you start drawing lines on this chart and making and whatnot, you can start to see patterns that aren't actually there that suggest that 1265 is significant resistance, and I just don't buy it. On the daily chart, it is. You can see it very clearly, but on the weekly chart, it's kind of nothing. This level is important, and really this level is what's actually important. But if gold can't even make it through this level on a weekly closing basis, then it has no chance of making it through this level. It really needs to hold 1266 or 1268 into the close today, and then use that as a springboard next week to break through 1272.40 and push back towards 1280. And maybe you'll get a pop next week into the 1290s. It's possible. It would be impressive if it did, but it would also have to break through that price rise from here, which is in the 1290s. And it would have to do that pretty convincingly. And by the first week in June. And I just don't see that happening. I think there are too many dollar positive things happening. The euro is backing off from $1.13. Oil is trying to break down. It's not moving in the yen. The British pound is moving back towards 128. And Trump is going to lay down the law in the G7 this weekend. And that's going to stop all of this short-term, oh my God, he might get impeached bullcrap. No, it's not going to happen. Hillary's going to jail for conspiring to murder Seth Rich before Trump ever gets impeached. Book that. You can book that prediction. I don't think either of those things are likely to happen. So, but one's got a higher probability because one is actually based in reality. All right. Or something close to reality. All right, so that's what we got there, and then we can look at silver. And silver, I didn't put up any. I'm sorry, I didn't put up any price annotations here, but it's very clear that we were looking at this 1729 level, and we wanted to see a break of that, and we did see that this morning. So, but remember, the short position in silver is much more epic, and the price move here on a percentage basis was huge. So, the short covering rally in silver, while oil is trying to look strong, makes some sense that we would get this kind of break here. So there's a possibility that we'll see 1770 or 1775 next week. It's very possible. I doubt we'll see $18 next week, not unless there's some huge piece of news that sends money into the metals. But right now, once silver works off the short position, I expect this is a downtrend now. Yeah, this is not a good pattern. Okay, this is higher highs and higher lows. This is a widening pattern. That's very bad. That's usually a sign of a market that's trying to roll over. Okay. So, but in the short term, before the end of the month, silver might have a little bit of upside left. We'll see what happens. Okay. All right, and the last thing I want to talk about here, and when you're looking at the charts real quick, is so we had this huge 2-bar reversal here in oil last week, right? So down bar and then closed above the high of this bar, so within 2 bars. So this is a 2-bar reversal, and that looked like it was. And we had one of these previously. And look what happened, and then boom, we still couldn't break through this cluster of resistance here, and we're not going to break through this time. We're not even close to that because what we had here is we broke above and then we broke below. We broke both the previous high and the previous low of that big huge bar from last week. That's an engulfing bar, and they're rare. And they're rare. They're depending on the volatility of the instrument, they're anywhere from, and the time frame, they're anywhere from 5 to 15%. A volatile high beta instrument will give you a reverse. Will give you an engulfing signal every 15. We'll give you an engulfing signal, say 15% of the time. And very low volatility, low beta instruments will give you engulfing bars like 5% of the time, or even 3% of the time. So if we got to close on oil today below this low, that's a bearish engulfing bar. That on its own negates this 2-bar reversal, and signals that we now have a major downtrend forming in oil. And the monthly chart on oil doesn't look any better. Okay. And all of this right here, this $55 area, is just massive resistance, massive overhead resistance. Oil had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 attempts to break through $57 a barrel. Brent didn't do it. It's not going to do it. It's not going to do it here either. Not with a bar like this week. All right. So that's pretty much all I've got. So let's watch to see if silver closes above 1729 today. Let's see if gold can put on a push after the European close above 1272.50. And if not, then we're setting up for the long weekend where people don't, we'll see what happens during the G7. But don't be surprised if on Sunday and on the low volume Monday that we get some movement down in the metals, setting up for Tuesday open. All right, you guys have a great weekend. We'll talk to you soon, and keep your stick on the ice.